We believe, long story short, that climate risk within real estate is very real, and hence why we have put a lot of emphasis on it in terms of assessing the impacts, short term, longer term, both from a transition risk as well as a physical climate risk perspective.
Joining me today is Rutger van der Lubbe, Head of Global Real Estate Investment Strategy at APG Asset Management. So Rutger, how does APG view climate risk within the real estate market compared to other sectors?
Yeah, it's a topic that we've extensively researched in the past to indeed assess the riskiness of various asset classes. We believe, long story short, that climate risk within real estate is very real, and hence why we have put a lot of emphasis on it in terms of assessing the impacts, short term, longer term, both from a transition risk as well as a physical climate risk perspective. Short term, we see actually that transition risk is already playing out through changing regulation that imposes all sorts of incremental requirements on real estate that we hence need to manage for. Longer term, that will hence reduce transition risk within real estate, given that retrofitting that needs to take place to improve energy and carbon efficiency of buildings ultimately mitigates that risk longer term. Yeah, we have also been instrumental in terms of introducing measures to measure transition risk, and the CRREM initiative is one of those I would like to mention. CRREM is the abbreviation for Carbon Risk Real Estate Monitor, and frankly it provides a yardstick to assess to what extent buildings are energy and carbon efficient vis-à-vis ultimately long-term objectives to meet the Paris Agreement. And lastly, I've not touched upon it yet, is physical climate risk. Obviously, we invest in buildings that are location bound, and hence having the ability to understand to what extent these assets are prone to physical climate hazards is very important in understanding potential impacts in terms of attractiveness to tenants, but also potential valuation impacts to those buildings.
Does the approach to engagement with the REITs differ from your approach to private real estate investments?
The short answer is no. And I want to nuance, though, that we first and foremost make a distinction between what we call engagements and also dialogues that we hold with companies or entities, generally speaking, in which we invest. So we are active owners to begin with, irrespective of whether we invest in private or listed real estate. And that means that we hence will have very frequent encounters with the entities in which we invest. And typically we'll have engagements to ultimately drive change within those businesses. Those engagements we do on an individual basis and typically relate to ESG matters, but could also have a other strategic purpose. But besides those individual engagements for entities in which we invest, we also are very keen to progress what we call market engagements. And those market engagements, there we look to collaborate with other asset owners or asset managers to frankly drive change within the industry. Within listed real estate specifically, the Green Initiative is one of those, and Green is the abbreviation for Global Real Estate Engagement Network. And through that initiative, multiple asset owners and asset managers look to drive change for the better in the listed real estate industry as a whole.
And what metrics are most valuable in evaluating REIT sustainability risks?
Yeah, at this point in time, we are very much keen to understand the energy and carbon intensity of the assets and entities in which we invest. Ultimately, having access to those data points puts us in a position to hence assess transition risk and also ultimately identify what potential improvements need to be made in terms of improving that energy or carbon intensity of buildings. To ultimately get access, though, to all those data points, we are also a big believer in asset level certification. And it's not so much for having the label in terms of the outcome of that assessment, but very much access to those individual data points. Because whereas at this point in time, energy and carbon is very much first of mind, ultimately over time we see that agenda shifting, and already now we are performing based on those data points assessment in terms of biodiversity impacts. But there's a whole range of ultimately initiatives that we will have to further understand to drive sustainability forward over and above these key metrics I already mentioned.